Most people shopping for earthquake insurance in California don't realize that not all earthquake insurance policies are the same. A big mistake is comparing price only. What this video will do, it'll break down the top earthquake insurance companies in California, show real differences in coverage, and help you make a decision to which one is the best for your situation. This video is not about which company is best overall, but which one is best for you. So let's get to it. All right, so the best earthquake insurance companies in California, we're going to look at Palomar versus GeoVera versus Zurich versus the California Earthquake Authority. And now, the four major options most homeowners will encounter in California are going to be, of course, the California Earthquake Authority, which is by far the majority of the earthquake insurance policies in California. And we'll go into the reasons for that later on. We don't particularly sell the California Earthquake Authority, provide an option for that. We believe in the standalone earthquake insurance product. We don't recommend the California Earthquake Authority, although it can be the right policy for some people. So, and we wanted to cover that in this video as well, because you are going to encounter it if you're shopping for earthquake insurance in California. Now, with that being said, Palomar Specialty Insurance Company, they have two earthquake insurance programs. One of it is the Value Select. The other is the Heritage. Now, in this video, we're going to talk about just the Value Select because it is the policy that is issued the most often, because it is the more customizable policy in GeoVera, and it is a very competitive. It is the more competitive product as well. So, similarly with GeoVera Earthquake Insurance, they have two programs. They have a flex limit and they have a single limit program. In this video, we're going to talk about the flex limit because it is the more common, by far the most common issued policy from GeoVera, and it is more customizable than the single limit, which bundles all the coverages into one balloon limit. So we'll talk about the flex limit from GeoVera. And then there's Zurich American Insurance Companies. And here you're not really just choosing an insurance company, you're choosing a type of a policy. Okay, that's what we're going to go in this video. That is going to be the main theme here. And with that being said, let's take a look at some of the companies here. And before we do that, I want to talk about how earthquake insurance works, and it's just a quick reference. So it is in general a separate policy that is not included in your homeowner's insurance. Your home insurance does not cover earthquakes, damage from earthquakes. It is a separate policy, or it is an endorsement to the policy that covers the peril of earthquakes with some carriers, a few carriers out there. It does carry a higher deductible than most home insurance policies. Most home insurance policies will have a fixed dollar amount, like $1,000 or $2,500 deductible. Earthquakes comes at a percentage. It is a higher percentage than most. It's a 2.5% to 25% deductible. It's designed for major losses, not minor cracks, just small cracks. If you have a major catastrophic loss, that's why the earthquake policy is there. And then the key components of coverage are the dwelling, which is the actual main house itself. The other structures, this could be the ADU, detached garage, patio in the back, paved areas, barbecue area, a pool. That's also other structures. The property retaining wall, fencing, those sort of things are other structures. Personal property, stuff inside your home, the contents, furniture, electronics, jewelry, breakables, stuff you can pick up and carry out the front door. That's personal property. And then loss of use, which is a big one. This is rent you'll pay elsewhere while the house is being reconstructed after damage from an earthquake. If you're a landlord, this could act as also loss of rental income for you. So your tenant is out of the house because it's been damaged, and you're losing out on income because they're not going to pay rent anymore to you. So that will be a loss of use, loss of rental income for you landlords out there. Okay, so now let's look at the companies themselves. California Earthquake Authority is the first one we're going to look at. And the pros are, it's really easy to qualify for the California Earthquake Authority because the top home insurance providers in California that write earthquake insurance, they provide earthquake insurance through the California Earthquake Authority, and the only qualification is that if you have a homeowner policy with one of these participating insurance carriers, you automatically qualify for the California Earthquake Authority. And all the big home insurance companies, most of the big home insurance companies, participate with the California Earthquake Authority, like the State Farm, Allstate, Farmers, Mercury Insurance, all those, they participate with the California Earthquake Authority. And if you have a homeowner policy with them, you can automatically qualify for an earthquake policy through the California Earthquake Authority. And it is widely available because those home insurance providers provide most of the home insurance policies in California. The cons: it's rated B+ financially by AM Best Rating, and it is not the highest rating available out there for financially. So this creates an issue with some homeowners that want a more financially stable earthquake insurance provider. It does not provide other structures coverage. So if your pool, detached garage, if you have an ADU, those other structures are not covered with the California Earthquake Authority. There's no coverage for those. Personal property, the maximum you'll get is just $25,000, and that may be fine for some people, but it is a little bit low limit that some people are comfortable with. Breakables is a very limited. It only provides $500 of breakables coverage. Of course, also jewelry, and jewelry is capped. It's only $3,000, and single item $1,000 per item. Loss of use, this is somewhat okay at $100,000. It's not as bad as the other parts of coverage. So $100,000 of loss of use coverage. And then the deductible, it could be a big issue here, because if your home is valued at $1 million or higher, or your home is built 1980 or prior with a raised foundation and it hasn't been retrofitted, then the minimum is 15%. So if your home is more than $1 million, 15% minimum deductible. If your home is built 1980 and has a raised foundation with no retrofitting, 15% minimum deductible. And some people who want a 5% or 10%, they can't get that. Okay, so next we're going to look at Palomar Specialty Insurance Company, and this is the Value Select program. As I mentioned, they're rated A by AM Best Financial, so it's got a very good, excellent rating, financially stable company. It's got a lot of flexible deductible options. It's got as low as 2.5% deductible, or to 25%, so it's much lower than the CEA. And there's no restrictions with respect to location. So anywhere in California, 2.5% deductible is available as long as your home qualifies. It has a strong dwelling coverage options, meaning that it's got built-in building code upgrade, 10% included, veneer and brick veneer or cement siding, that is included. Masonry veneer is included in the dwelling coverage amount. They have very competitive pricing in many areas of California. It's designed specifically for catastrophic risk. And the unique angle is ability to tailor the policy for homeowners' needs. What this means is that if you have a detached ADU and you want the other structures to be equal to that, is a big ADU, you want it equal to the homeowner's policy, you can have the other structures be equal to the homeowners. So if you have a lot of personal property you want to include, you can have up to 100% of personal property of the dwelling coverage amount. So it's very customizable. It's got a great cost to coverage ratio. And the con or the consideration for you would be that some homes may not qualify, so they're a little bit stricter on the slope if your home is built on a steep slope, and some foundation types, then you might not qualify for this program. That is some of the considerations that we could take a look at, see if your home will qualify for those without you committing anything. Okay, moving on to GeoVera Earthquake Insurance Companies. So we're going to look at the Flex Limit here program, the Flex Limit program, as I spoke earlier. They are financially rated A by AM Best, so they have an excellent rating, just like Palomar, from AM Best Financial. A very financially stable company. It is a highly customizable policy, meaning you can separate the type of coverages you want for other structures, personal property, loss of use, and then they also let you split the building code upgrade. So if you get a separate coverage for building code upgrade, then Palomar does. And so if you have a newer home, it's already has the latest code upgrades, then you might want a less coverage for that portion. But if you have an older home and you want more coverage for building code upgrade, they'll let you do up to 10% as a separate coverage. Same thing for masonry and veneer coverage. It's got an additional section for it. You can change the limits of how much coverage you want for masonry and veneer, versus Palomar has that built in. Very competitive pricing in many areas of California. And the unique angles would be, this is the more control. So you have more control over your policy, how you want the coverage customized. And a good thing here is that they have no slope restriction versus what Palomar does. So if your home is built on a steep slope, on a hilltop, then there is no slope restriction. It doesn't matter what the slope degree is, and they'll take your home. It takes more foundation types than Palomar. So if you have post and pier foundation, that is okay with GeoVera. And some of the considerations, though, are some locations have a higher deductible restriction. So if you're very close to a major fault line, like the Hayward fault line, or if your home is located somewhere in the desert, very close to the San Andreas fault line, then you may have a higher deductible forced on you. So some places have a higher deductible, as high as 20% minimum with GeoVera. So that becomes an issue there, trying to get a policy from them. So we may have to look at different options for your home. And retrofitting discount is another thing. It's applied post-binding. That means you have to have the policy issued, and then we provide the retrofitting certificate to the insurance company. You will get a credit back, a refund back, or credited back to the remaining balance of the premium for that retrofitting discount, versus Palomar would just apply it, and you would have the applied retrofitting credit of the total premium that you would get invoiced for. So that's the other thing that GeoVera has as a consideration for comparing. And what we want to look at next is a Zurich American Insurance Company. And Zurich is the highest financially rated insurance, standalone earthquake insurance company available right now in California. And they are A+ rated. Okay, so that's very good, very, very good financial rating. And it's very good for high value homes, or unique homes. It's called it has broader underwriting flexibility, meaning no slope restriction. So again, just like GeoVera, there is no slope restriction with Zurich American Insurance Company. And the unique angles are just that, is a high value for high value homes. It has very broad coverage with other structures like pool coverage and personal property limits. Some of the sub-limits are for higher value homes and complex risks. And consideration is that it's not always the cheapest option out there. So there may be a lower cost option than Zurich, although some places they're very competitive, more competitive than the others. And homes built prior to 1955 that have not been retrofitted will not qualify for Zurich. So they're good for homes built 1956 and above, or if it's been retrofitted, they have no age limit. So as long as it's been retrofitted and is built after 1956 and above, then it's fine with Zurich. Okay, next I want to take a look at, and we're going to look at the side-by-side comparison here of what these coverages mean. So for AM Best rating for these companies, other structures, personal property, breakables, age of the home, slope restriction, and the deductible options for these carriers here: CEA, Palomar, GeoVera, Zurich. So CEA AM Best rating B++, Palomar A, GeoVera A, Zurich A+. So they win. Other structures: CEA not covered. Palomar up to 100% of the dwelling coverage. So your other structures coverage that you have, like a detached ADU, you can get the same limit. If it's a big ADU, you can have this up to the same limit as your main home dwelling coverage. GeoVera 25% of other structures. Okay, so we have to keep that into consideration. Zurich has a standard 10%. That's by default, so it's not very customizable. Zurich also, so they're just going to get, if you don't want any or you want more, you won't be able to get more than this from Zurich. Personal property CEA maximum is just 25,000. Palomar up to 100% of the dwelling coverage amount. 75% GeoVera, that's not bad either. And Zurich again 50%. You have no say so. This is just the standard what they provide. So it can't be less, can't be more. Breakables coverage. Max CEA is $500. Palomar and GeoVera up to $25,000 within the personal property limit. Zurich, it can be up to $50,000. It's $25,000 by default. They have a special endorsement you can add. It'll take it up to $50,000. And the age of the home, CEA has no age limit. Just if the home insurance takes it, they'll take it. Palomar 1900 and above, so that they go pretty back. In age of the home. So as long as 1900 and above, they'll take it. And GeoVera 1925 and above, and Zurich retrofitting required for homes built 1955 or prior. Slope restrictions: CEA none. Palomar requires underwriting approval for steeper slopes. GeoVera, Zurich, no slope restriction either. Deductible options: CEA, some areas may be restricted to 15% minimum. Palomar, no restrictions in any of the areas. You get as 2.5% to 25% if your home qualifies. GeoVera, some areas have higher deductible restrictions, so you have to be aware of that. And then Zurich, they offer 10 and 15%. Some areas you can get as low as 5%, and some areas is just 15% for Zurich. So it depends on the area what the deductible will be with them also. And biggest mistakes homeowners make when doing earthquake insurance is choosing based on price alone. Not understanding the deductible is another one. So just because a CEA, for example, they just sent a default offer of 15% when you buy home insurance, and people just select that. They don't look into it any further than that. They don't have time, or they don't want the headache. But not understanding how it works, a lot of people think the deductible applies to the amount of damage, but that's not true. It applies to the coverage limit, not the damage limit. So if you have $100,000 of damage, it's not 15% of that. It's 15% of the coverage amount. If you have $1 million home, the deductible of 15% will be $150,000. So $100,000 damage will not give you any kind of coverage. Okay, assuming all the policies are the same, you saw all the differences in coverages, so they are not all the same. Underinsuring personal property, and a big one is not reviewing loss of use, which could be huge. If you're out of the house for 3 years, while your home is being reconstructed, that can add up in monthly rental costs for you. So that could be huge. You know, California has high rent, and those add up. Those months will add up. And then lastly, how do you choose the right earthquake insurance company? You just ask some questions to yourself. What deductible can I realistically handle? Okay, and you have to have this set aside to pay the contractor, because the earthquake insurance company is going to cut you the check between the damaged amount and the deductible, and then the difference you're going to have to pay the contractor out of pocket. So if you're comfortable with a higher deductible and have a lower premium, but you kind of have to consider the worst case scenario when doing this. It is a catastrophic insurance, catastrophic risk insurance that you're getting. So keep that in mind when you do analysis of what deductible you can afford and or handle, or comfortable with. That's better. Do I want a basic policy, just a dwelling and a little bit of personal property, no other structure, or do I want to customize it? And how long will I own the home? We can get into what that refers to in another video, but it's something to think about is how long will I have this home for, and what it will mean to me to have the earthquake insurance protect my home. The importance of reviewing multiple options side by side, because you could be missing out on lower premiums, you can missing out on important coverage that you need, or it's important for you, that coverage, but not knowing that it's available, you just have a default offer. You think, well, that's it. That all insurance companies are like this, and it's not the case. And when you work with somebody who understands earthquake insurance, they can provide you this information. There are other agencies out there that understand earthquake insurance other than earthquake agent insurance services. There are others who specialize in that, so it's not just us. But it's important to work with somebody who understands earthquake insurance. They do a lot of earthquake insurance on a monthly, regular basis. Well, folks, that's about it. I hope you found this video helpful for picking the right earthquake insurance company for your home. If you'd like to learn more about earthquake insurance, go to our website at earthquakeagent.com or give us a call today.